Hello, hi, good evening, everyone. I hope you are good. Yeah, we will wait for some few people to arrive. And in today's session, we are going to talk about Nifty, Bank Nifty view and what could be the future stocks that could give us huge returns. So we are going to talk about technical analysis as well as uh, the view of the markets for the coming future. Now, I hope you can hear my voice clearly and you can see my screen. So I will just start Nifty and Bank Nifty analysis in a minute or so. Right now, till that time, you can add some of your own stock queries as well in the comment section, and I will check them out as well. So first, let me just show the Nifty and Bank Nifty view here, and then we will proceed ahead. So as you can clearly see that Nifty has given us a breakout here, and it has given us almost it is near the all-time high. And what do you think? Where what does your analysis tell you? Kindly let me know, and then I will add my views with you. Right? What do you think about Nifty? Our viewers, do you think that Nifty is bullish, or is Nifty going to head higher, or is Nifty going to get a head lower from here? Now, basically, if you look at the charts here, we can clearly see that Nifty had a resistance at around 18,076 rupees, 76. Now it has broken that resistance, uh, and it had tried to break above that resistance, pulled back, and then finally it has given me a bullish candle. I would consider this as a bullish candle because at the end of the day, it covered all the losses, or it covered all the uh, pullback that it had in the morning. It filled all the gap, covered all the losses, and then filled the gap here. Right now, if you look at this chart right now, I think Nifty is has a strong support at around 17,800. Let me just apply the moving averages. Now, the moving averages that I'm going to apply here are basically the 21 and 50 EMA, so that we can understand the short term trend as well as the medium term trend of the stock. So the red line that I'm going to apply is the 21 EMA, and the green line that I'm going to apply is the 50 EMA. So as you can clearly see here that Nifty is bullish. It had, after a strong consolidation here, it had broken out, gave a good rally, and is now near all time high. Before we look at the weekly time frame as well, we will look at the weekly time frame as well, and we can see that if I draw a trend line here, then it has given me a trend line breakout, retested, and near the all time high. So any kind of pullback that you see here should be used as a buying opportunity. So use pullback as a buying opportunity in case of Nifty, and Do not look or do not short at a rise unless and until we see a proper reversal like this. So for reversals, you know that how the candles are, right? So as you can see here that there are huge bearish red candles at the top of the trend. You can see, you can call them as bearish engulfing candle. And these candles, if we see a candle like this right now, then we may think of further, um, we will change our view at that period. But right now it is a buy on dip scenario. You can use any kind of dip to short the put side, or you can short at the money or out of the money puts here and create a spread, like a bull call spread, where you, not bull call spread, basically where you short the out of the money puts and hedge it as well, right? Now, how many of you here are trading options? Can you let me know how many of you are trading options here? Now, if you are trading options, so how do you trade options? Basically, we are going to trade options by using spreads. It is always advised not to buy naked options, or not to sell naked options. You can always try to you can always try to hedge these options and improve your probability of trading. So it's better that you use spreads and not do naked buying as well. Now let us now check the view of Bank Nifty. So Bank Nifty is one of my, I trade Bank Nifty, and it is one of my favorite instruments. And as you can clearly see, after a very long consolidation of more than 7 days, 8 days, it has broken out, retested that breakout area. Finally, it had open gap up. It broke that, retested that breakout area, and then finally it has moved up. So the end action, you, as you can clearly see, is a lot. I would call this as a very bullish action here. And I am looking for a fresh rally as well, right? So here I think any kind of dip that you see, if in case we see a dip here around 41,700 or so, 150 point pullback or something like that, then use that as a buying opportunity rather than shorting any kind of option, call options here, right? So it is a buy on dip scenario sell on uh, uh, rather than sell on rise here, right? Hi, good evening everyone. Hi, I hope everyone is doing fine and had a great Diwali, right? So after that, we see strong support at around 40,900. So it is a very important zone. Any kind of pullback till here should be used as a buying opportunity rather than and we would only have bearish position. We would have bearish position only below this price. Okay. So this is the Lakshman Rekha, as you can I can say that this is the Lakshman Rekha for our trades, and below this only we are going to trade for short side, and above this we are going to trade for long side. So here we can create a spread where we can sell call options above this and put options below that. And if we get a pullback and Bank Nifty still consolidates here, then we can have that kind of view, right? So apart from that, the multi-bagger that I was going to talk about is, I seriously think about this stock which has a very strong, which has a very strong technicals, I can say. Here is Sakti Sugars. Okay, so this is a stock that I can say has a very long way to go. And if we look, I will apply the 30-week moving average line on this chart. So as we are now looking at the weekly time frame, we will apply the 30-week moving average line. So this is used for stage analysis. Now, if you have learned about stage analysis, then can anyone tell me in which stage the stock is here right now? Can anyone tell me which is the stage of the stock right now here? It is a, we have talked about stage analysis in our Telegram as well as in our uh, many educational content videos that we see. So this is not stage 4. This is stage 1 breakout that the stock has given us. The stock has given and is now at the stage 1 breakout retest area and now entered into stage 2. Right, correct. So stage 1 was this area where the stock was completely sideways. So this is the stage 1 area. Okay, now the stock has given me a stage 1 breakout here, and this was the breakout area. Okay, so as you can see that the stock had given me a breakout here at this price, and now the stock has entered into stage 2. Okay, so this is the breakout candle, and now the stock has entered into stage 2 here. So this is the stage 2 breakout retest of the candle. Right now, this is providing us a very low risk, high reward opportunity, and we have seen a lot of stocks, similar stocks, where the I can say that um, uh, stocks had given a stage 1 breakout, entered into stage 2, and then gave multi-fold return. So one such example that I can talk about is, let me just show you side by side why I am focusing on these stocks. So let me just show you one stock, SDBL, that is Somani Distillery. Now, if we look at the weekly time frame here as well, so as you can see here, let me just draw the. So can you see after the stock had entered into stage 1 here as well, it broke out, retested that area, and has now around gave around 50% returns and now pulled back. So this is a for 55% return and pullback. So similarly here we can see a similar structure where the stock has Shakti Sugars has broken out, retested, and then can move into the upper direction. So stop loss for such trades would be at around, I would say, to have a stop loss, you can keep a stop loss at around 19 rupees and keep a target of 30, 35 rupees and 40 rupees. So we can keep 50 to 80% of the targets, and stop loss of around 10% from here. So 19 rupees would be a good stop loss here, and you can keep 25, 30, 35, 40 rupees as targets as well, depending upon your risk appetite. Now, if you haven't watched our YouTube videos about algo trading, so it is a humble request for everyone to go and watch those videos in the playlist as well. And I today only I made a video about option buying as well. So you can go and watch that video to understand how you can create your option buying system and how you can generate profits on your own. So after Shakti Sugars, there is one more stock that I think can give a good multi-bagger return for the coming future, and that is South India Bank. Now, South India Bank, as you can clearly see, has now currently it is a little bit extended stock, I can say. But if you get any kind of pullback opportunity, if you get any kind of pullback around 13.8, 13.5 rupees, anything like that, then it should be looked as a buying opportunity. So it is a humble request for everyone to keep an alert at this price. Okay, do not go and buy the stock randomly at any prices. It is a very important concept of buying the stock at correct prices. Okay, if you do not buy the stocks at correct prices, then probably it is just gambling, and you are not getting the proper risk to reward ratio. So overall, in the longer run, you are going to lose money, and that is not good as well, right? So it's important that you buy the stocks at the breakout rather than chasing after the breakout has already happened, right? So this is the South India Bank, and as you can clearly see the structure, we are going to have a live stream of how to trade breakouts effectively. That would be of around 2 hours, and that would be a very sensational topic. And I can say it would be mostly on YouTube Live or probably a closed session. Now, in that session, I'm going to talk about some of the features. So here, as you can clearly see, volume on breakouts are really important thing here. So let me just zoom in here 1 second. Now, if I zoom in here, you can see whenever the stock price is moving up, there has been an increase in volume here. Whenever the stock price is moving up, there has been an increase in volume. Okay, wherever the stock price is moving up, there has been an एक second. So it is a very important characteristic of it is a very important characteristic key. Always wait, always look for volumes during the breakout, because for price to move up, I'll just give you example ki why are we looking for volumes to move up. Now if you want to go up the hill, basically, will can you go up the hill on an empty on a in a car that is without petrol? Huh? Can you go on a hill at the top of the hill in an empty car that is without petrol? Just a simple question. So, if you can answer that. Now, if you answer yes, then probably you need to understand the concept of driving. And if your answer is no, then probably it is petrol is like volume for a stock. Now, as you require petrol to move around, or as you require as a car requires petrol to go at the top of the hill, similarly stocks require, or stock prices require volume to go up, basically. So if they want to move up, they will require volume support. So these are the characteristics of volume, or these are the characteristics of accumulation of bigger sharks, basically. Okay, so this is a really important thing that you have to remember, that volume has to go up whenever on the up volume days, and volume can pull back on down volume days here. So after that, as you can see here, that stock had broken out on huge volumes, and now if you see that the stock is had good accumulation, and now I think so the next levels for the stocks are around 18.8 rupees, and the next level for after that is around 27 rupees. So it could directly double from here as well, uh, if you just wait for the stock to pull back. Right, so this was the second stock that I think can give more returns. And okay, there's a good question. According to Stan Winston, the Sakti Sugar stock is an example of a B grade stock. Why would you pick the stock over a stock that is at an all-time high? Example, Sundaram Fasteners. Now, basically, there are two types of approaches that you have to do. Now, if you want to buy a stock for a longer period of time, and not for a trading purpose, then I would select stocks that are coming out of stage one and entering into stage two. But if my purpose is just to ride the momentum, and if I just want quick gains, then at that period of time, I would go and buy 52-week high breakout stocks. So it depends. In the end, it depends upon your. In the end, it depends upon your holding period and what is your view. So I buy both the kind of stocks, where I buy stage one breakout stocks as well, and I buy 52-week high breakout stocks as well. But as you can clearly see, this stock is at Sakti Sugar is at 52-week high breakout as well. So you have to understand this, that uh, the 52-week high breakout is 27. The stock is now trading at 22 rupees. So whenever generally a stock gives us a stage one breakout, it automatically is in 52-week high breakouts as well. Okay, so this is one thing that you have to remember, that 52-week high uh, stage one breakout itself is a 52-week high breakout, because stage one breakout generally occur after a consolidation of more than 2 years. So whenever they are going to break out, it will automatically get scanned into 52-week high breakout. Right? I hope I cleared that query in case of stage analysis. If anyone else has any query on stage analysis right now, particularly on the concept, then let me know in the comment section, and I would help you out that in that case. Right? So, uh, Sakti Sugars is one stock that I think so can give much higher returns. And South India Bank is the second stock. The third stock that I can talk about is basically 1 point solution. Now 1 point 1 solution is one more stock. As you can clearly see, the stock has given us a breakout after a long consolidation as and is now trading at 52-week high after again consolidating here. So what one can do is wait for a pullback around 14 rupees to enter, or wait for the breakout to happen, right? Similarly like here, it is like kind of a flag and pole pattern breakout where this is the support line, this is the this is the support line, this is the resistance line, and wait for a breakout to happen. uh Wait for the breakout to happen above that. So as it is, as you can clearly see that it is already a 52-week high breakout, and stage one the stock had given me a stage one breakout at around this price 3 rupees. And finally after the breakout, see similar structure, after breakout the stock retested 40-50% and then moved directly. So similar structures uh, you are going to see again and again, time and again. These things are going to get repeated, I can say. So SDBL was such example. I can show you one more example where in case of marathon next generation. So look at this example. It gave me a stage one breakout at around 150 rupees. Now after a breakout, it moved from 150, 150, 160 to directly 260 rupees in a matter of few months. A 70% gains in a few months. So this is one thing that you have to remember, that after a stock gives us a stage one breakout, you should be tracking that, and probably waiting for the stock to retrace in case you have missed the stock, or you should be waiting for the stock to further pull back and then enter at a correct low risk high reward opportunity. Now coming back to the video that I had played here. Now Market Smith Markets League, and basically we are going to conduct a algo trading webinar where we are going to talk about a lot of expiry trading, and we are going to talk about uh, the quick analysis after the quick analysis of expiry room. Now here, this is a conference which has 25 plus sessions, and more than 20 plus markets experts are going to come and trade with us from a capital of 10 lakhs to capital of more than 1 crore. And we are going to talk exciting things about algo trading, as well as we are going to talk about the future of options trading as well in India, and what are good, what is better, option buying or option selling. So regarding that, I have requested them for a promo or a discount for our TechnoCharts subscriber. So I have shared the discount link in the description below. You can use that link to subscribe. And we are going to start this in December basically. And it would be a 5 day, 4 to 5 day session where it could be a interactive session, and we are going to learn a lot of things about that. Right. So after that, the similar stock we can see is Indian Terrain here. Now, as you can see here, that Indian Terrain has given us a breakout retested area and now moved up. So we can keep a stop loss of around 70 rupees or so and keep holding this stock for a longer period. So the targets that I see in Indian Terrain are 98 rupees from here, and the next target is 140, not 140, probably 112 and 140. So for this, you can keep a stop loss near 67, 68, 60, sorry, 68 rupees or so, and enter at current market price as well. Okay, so if you have any stock query that you want me to cover, then let me know in the comment section. I would try to cover uh, the common stocks that everyone has. So if you have stock queries, then put it in the chat box. So Satya Industry is one of the stocks. Satya Industry definitely is one of the stock that I'm tracking as well. Now, if you see if you look at the chart, then it is a great chart. The stock has given us a breakout. Finally, it has given us a breakout and then retested that area. I would say that it is a you can keep on holding the stock with stop loss at around 130 rupees, and you can keep a target of around 150 to 170 rupees. Right. So these are the targets for particularly this stock. Divis Lab is not a buy, I would say. If you look at the chart of Divis Lab, it now I'm going to test your understanding of stage analysis. What do you think? What do you understand by the stage analysis of Divis Lab here? What do you understand by the stage analysis of Divis Lab here? Can anyone tell? It is a very important concept that I can say it can save you, it can save your a lot of tons of money. I can guarantee you if you understand uh, what is the stage of Davis Lab. So as Akshay ji has correctly said that this is in stage 4. Now stage 4 stocks should never be bought in any case. How much attractive they might be for you, but stage 4, if you are entering into stage 4 stocks, it's basically like you are digging your own pit and jumping into that pit and then asking someone for help ki just help me to come out from that dig or come out from that pit basically. So stage, if you understand stage analysis, if you understand the concept of stage analysis, then it is really important that you do not enter into such stocks, how much attractive they might be for how much attractive might be they might be, right? So there is no short-term buying opportunity in this particular script, and I do not recommend buying here in this stock, right? I hope you understood that why I'm not why I do not recommend buying such stocks. Okay, so if you like my analysis, just put a thumbs up. I mean, do like the video, do share the channel with your friends so that you know you can help me grow this channel. We are now going to touch 10,000 subscribers soon, and probably with your help, we can achieve bigger milestones. And just hit like button so that it can help us or it can help our channel grow, right? So if you like the video, do share it with your friends, and I'll just sh- talk about last stock, and that would be RVNL. Now RVNL is one of the stocks that is a trending stock. Uh, people are in trend now. You can probably, if you have it from 30 rupees, you can book partial profits. As you know, no rally, nothing can sustain such kind of rallies here. No, a pullback would be definitely there, and it could be a very deep pullback. So stock can head towards 40-45 rupees as well. So it's better that you book partial profits at this price and then exit, right? So thank you for your time, my dear friends, and I hope to see you soon. And we will have more live sessions in the coming future, regular live sessions at around 7:30 p.m. And do follow Techno Charts on Telegram as well as on YouTube. And thank you.